Ready for a deep dive? We're getting into some serious tax code today, huh? The Dominican Republic's proposed Proyecto de Ley de Modernización Fiscal.
Wow.
Big changes. A complete overhaul of their tax system.
Ambitious.
And we love getting into the nitty-gritty here, right? So we've got all our sources. We're going to unpack every single detail of what's changing.
Yeah.
But more importantly, what it all means for you.
And it's fascinating because it's not just about the numbers. This legislation, it's directly linked to the Dominican Republic's Estrategia Nacional de Desarrollo 2030, their long-term development strategy.
So it's like they're playing 3D chess with their tax code, making moves now.
Yeah, exactly.
So hopefully support
their
more
goals,
things.
yeah, for years down the road.
Exactly. It's not about, just getting more money today. It's about funding sustainable development. It's about making the tax structure fairer.
Right.
And building long-term fiscal stability. They even use this term pacto fiscal, which suggests that they're really aiming for this broad societal agreement on how to manage their finances going forward.
Big goal.
Very ambitious.
Ambitious. Okay, so let's zoom in on one of the biggest changes here. They're replacing their existing sales tax, the ITBIS, with a new value-added tax, the IVA. Now, I don't know about you,
Right.
but I'm not a tax expert.
Sure.
Can you break down for us what that actually means in practice?
Absolutely. So imagine a product, let's say a cup of coffee, right?
Okay.
Going through all the stages to get to you, the consumer. With a sales tax, you're only taxed at the very end when you buy it.
Right.
But with a VAT, a small tax is added at each step along the way. So the coffee beans being grown, then processed, then shipped, then brewed, at each of those stages.
Okay.
Value is added, and so it's taxed.
So it's less about taxing the end product
Right.
and more about taxing that whole journey of how it got there.
Precisely. And that can actually mean a broader tax base because you're taxing more goods and services as they move through the system, which could mean big changes for businesses and consumers in the Dominican Republic.
Definitely.
What are some of the typical implications we see when a country switches over to a VAT system?
Yeah, well, in the short term, it can sometimes lead to higher prices for consumers, right?
Makes sense.
Because those added taxes at each stage, those can be passed down.
Right.
But it can also encourage businesses to become more efficient
Okay.
because they're trying to, minimize their tax burden at every step.
So a potential win-lose situation.
Yeah.
Depending on how things shake out. Yeah.
Absolutely.
Now, the bill also talks about a simplified tax regime, or RST.
Mm-hmm.
It sounds like they're trying to make things a bit easier for smaller businesses, which is always a good thing, right?
In theory, yeah.
In theory.
The goal is to simplify those tax calculations
Right.
for eligible businesses and professions.
Mm-hmm.
For example, the bill states that professionals earning below a certain income threshold, they can get a flat 40% deduction
Wow.
for expenses when they're calculating their income tax.
So less paperwork,
Exactly.
less headache for those who qualify. But
Right.
you said, in theory,
But
is there a catch?
The document also outlines, very specific grounds for being excluded from this simplified tax regime.
Oh, interesting.
So, digging into those exclusions, I think, could reveal a lot about,
Yeah.
who the government considers maybe higher risk, requiring a closer look.
Makes you wonder who those exclusions might hit the hardest, right?
Yeah, for sure.
Now, speaking of things that could impact a lot of people, let's talk withholding tax. This bill gets very specific here, impacting freelancers, professionals, even rental income.
Yes, and those, those modifications are really important
Yeah.
because they directly affect cash flow.
Right.
For everyone involved.
Mm-hmm.
For example, there's a new 1% withholding requirement on payments to certain professionals,
Okay.
capped at 5% of the invoice.
Yeah.
So that means, both parties need to adjust
Right.
how they're managing their money throughout the year.
It's like a mini tax installment plan,
Right.
even before you file your actual return.
Exactly.
Speaking of which, the bill mentions this being a single and definitive payment for certain employees. And again, I'm not sure everyone listening is a tax whiz, so could you clarify what that actually means?
Yeah, so essentially it means that for eligible employees, the tax that's withheld from their paycheck,
Okay.
that's it. That's the only income tax they'll owe for the year. They don't have to file a separate tax return or worry about owing more later.
So a potentially huge simplification for some.
Huge.
But it definitely raises the question of who qualifies and why.
Right, yeah, who benefits?
Exactly.
Yeah.
Next up, we've got a sugar tax. And this isn't just a general idea either. They are getting very specific, with rates based on the sugar content per 100 milliliters of drink.
Yeah, and they even list the exact harmonized system codes, right,
Wow.
for the affected drinks.
Wow.
These codes are, the international standard for classifying traded products.
Right.
So if your beverage falls under a certain code, you got to be aware of these new taxes.
So this isn't just about like gently nudging people towards healthier choices.
Right.
It's about sending a very clear message to the beverage industry. Sugar content has financial consequences.
Yeah, it has an impact,
Yeah.
but, it's not quite that simple. The document also outlines exemptions to this sugar tax.
Oh, exemptions.
Yeah.
Why create exemptions if the goal is, at least in part, to try to improve public health?
Well, some exemptions might be for products that are considered essential or irreplaceable, right?
Right.
Like certain formulas or medical products where there's just no real alternative.
So it's about finding that balance
Yeah.
between encouraging healthier habits
Right.
and acknowledging that,
Practical reality.
the practical realities of the market.
Right, exactly. And, those exemptions can often reveal a lot about a government's priorities, right?
Yeah.
And how they view different industries.
It's like a glimpse into their decision-making process.
Exactly.
Now, I know we're just scratching the surface here. This bill impacts tons of other sectors, too. Real estate, casinos, free trade zones.
Oh, yeah.
It's a lot to unpack.
It highlights how these large-scale reforms have these, ripple effects,
Yeah. Right.
across so many industries.
Yeah. Absolutely.
And while we're, focusing on the key points here,
Yeah.
those minor details, those are important.
Right. That's often where the real impact is.
Exactly.
Yeah. Okay, we've talked about some potential tax increases here,
Mm-hmm.
but this bill also outlines a number of tax breaks and exemptions. What's the strategy there?
Well, often these breaks and exemptions, they reflect broader economic or social goals,
Yeah.
right? So it's about trying to incentivize certain behaviors and investments.
Right.
For example, there are tax breaks for first-time home buyers,
Okay.
which suggests that they want to increase home ownership rates.
Makes sense.
Right.
Yeah, absolutely.
And then we also see incentives for importing electric vehicles.
Right.
So clearly
Sustainable transportation.
a nod towards sustainable transportation.
Yeah.
Exactly. We also see exemptions for certain cultural and philanthropic trusts, right?
Interesting.
Which indicates,
Yeah.
a focus on fostering those sectors as well.
It's like they're trying to subtly nudge the Dominican Republic towards a specific vision of the future,
Yeah.
and they're using these tax breaks as a tool.
Incentives.
Incentives, yeah.
Yeah.
Speaking of kind of nudging towards the future, this bill doesn't just introduce new things, it also repeals or modifies a
Yeah.
whole bunch of existing laws.
It's a big one.
And this is where things can get really, really complicated.
Oh, absolutely. This modernization aspect,
Yeah.
it's all about cleaning up, updating the existing tax code, and, it creates winners and losers.
Right.
Some will benefit from the simplification,
Right.
while others might find themselves, having to navigate new complexities.
Exactly. So for our listener who needs this information to be crystal clear, could you walk us through a couple of the most significant repeals?
Sure.
And tell us why they matter in this grand scheme of this tax overhaul.
Okay, yeah. One notable repeal is Article 48 of Law Number 2, 5312. This article previously gave tax breaks to companies operating logistics centers in the Dominican Republic.
Okay.
They could avoid a 5% tax on their gross sales if they met certain criteria.
Wow.
But with this new legislation, that article is gone.
Wow. So no more special treatment
Right.
for those companies. What's the reasoning behind that, do you think?
Tough to say for sure without, deeper analysis.
Sure.
But it could signal a move towards,
Yeah.
leveling the playing field a bit, making sure all businesses are contributing fairly,
Interesting.
regardless of their industry.
It seems like they're trying to really shake things up with this bill.
Yeah, it's a big overhaul.
What other repeals should our listener be aware of?
Another significant one is the repeal of several articles within Law Number 10810, which focused on promoting the Dominican film industry.
Okay.
These articles, they provided various tax incentives for film production in the country,
Interesting.
from, tax breaks on importing equipment to exemptions from certain taxes on income,
And those are gone now.
gone.
That's a pretty big deal for the Dominican film industry.
It could be. It suggests a potential shift in priorities.
Right.
Maybe moving away from incentivizing those foreign film productions and focusing on other areas for economic growth.
It's amazing how much they packed into this legislation.
It's comprehensive.
And this is really just the tip of the iceberg, right?
Yeah.
We've got even more ground to cover in our deep dive, from the potential long-term consequences of these changes to how specific sectors might be impacted.
A lot to consider.
A lot to consider. But don't worry, we'll be back in a moment to break it all down. Stay with us on the deep dive.
So, as we dive back in, let's think about how this Proyecto de Ley de Modernización Fiscal might actually hit different sectors in the Dominican Republic, like on the ground.
You mentioned earlier those finer details. Those are often where the really interesting stuff is.
Oh, absolutely.
So let's zoom in on a few specific areas here. For example, the bill gets incredibly detailed when it comes to casinos, right?
Yeah, for sure. It actually modifies Law No. 9688,
Okay.
which governs slot machines in casinos,
Okay.
specifically like changing the regulations around importing them.
Interesting. So it's not about gambling itself. It's about controlling how those machines get into the country in the first place.
Right, exactly.
What's the significance of that?
It could be a few things. It might be about tightening controls, just to,
Yeah.
make sure the machines meet specific standards,
Right.
or even just like limit how many are in circulation.
Okay.
And of course,
Yeah.
it impacts government revenue,
Right.
Because
Yeah.
those import taxes on those machines, exactly.
Okay, so it's a two-pronged approach.
Right.
Regulation and revenue. Now, how about real estate? We touched on it earlier, but this bill has a lot to say about property.
Yeah, one specific area of focus is luxury real estate.
Okay.
It modifies Law No. 1888, which deals with taxes on those, high-end homes and also
Right.
undeveloped urban land.
So people with those really fancy properties, they might be seeing some changes in their tax bills.
Yeah, potentially.
But, it's not just about asking more from the wealthy here, right? There are other provisions related to real estate in this bill.
Absolutely. For instance, there's a push to simplify the tax regime for first-time homebuyers,
Okay.
which could encourage, more people to enter the housing market.
Right, which means more construction, potentially more jobs.
Exactly.
Just a boost to the overall economy.
It's all connected.
It is all connected. And speaking of interconnectedness, we can't forget about those free trade zones. They always seem to have a unique place in these sorts of tax reforms.
Yeah, they do. The bill modifies Law down to 890, which governs those free trade zones.
Okay.
And it outlines some, very specific tax exemptions
Okay.
for companies operating in those zones.
So the government is still incentivizing businesses to, set up shop in those zones.
It seems that way, yeah.
Yeah.
Those exemptions could cover income tax, import duties on certain goods, even property taxes. It's all about,
Yeah.
attracting that foreign investment, generating those jobs.
Essentially creating those economic hubs that can hopefully drive growth for the entire country.
Exactly.
It's a good strategy.
Yeah, and it's also worth noting this bill modifies the Dominican Republic's customs tariff,
Okay.
specifically, the import duties on certain goods.
So they're adjusting those levers too, trying to, incentivize some imports and maybe discourage others. Could you give us an example?
Absolutely. They're introducing a zero tariff on bituminous mixtures.
You're going to have to explain that one.
Think road construction.
Yeah.
Bituminous mixtures, those are essential for building roads. And by eliminating the tariff on those, well, it could be a sign of,
Okay.
a big push for infrastructure development.
So smoother roads ahead,
Potentially.
potentially. And that's good for everybody, right?
In theory, yes.
Yeah.
But
Mm-hmm.
as always, got to think about those ripple effects, right?
Right.
Lower import duties on one product, well, it could impact the domestic producers
Of course.
of that same product.
It's all a balancing act for sure.
Always is.
Now, something we've been kind of touching on throughout all of this is how this tax reform is trying to align with that Estrategia Nacional de Desarrollo 2030.
Right, and that's crucial.
Yeah.
The government sees this tax modernization as essential
Yeah.
to achieving their long-term goals
Right.
for the Dominican Republic.
Just about today.
Not just about collecting revenue today, it's about supporting specific industries, it's about promoting social goals, creating a system that can actually enable sustainable development.
It's about shaping the future. It's not just about balancing the books for right now.
Exactly, exactly. And that leads us to another, I think, fascinating aspect of this whole thing.
Okay.
This emphasis on transparency
Okay.
and accountability.
So they're not just changing the rules. They want to make sure that everybody's actually playing by those new rules.
Right, exactly. The bill has provisions in it to strengthen tax collection,
Okay.
trying to make the whole process more efficient and hopefully reduce tax evasion,
Which is a problem every country struggles with.
Oh, for sure.
But how do they plan on actually doing that?
Well, I mean, just simplifying the tax system itself can go a long way, right?
Right.
If people understand their obligations more clearly,
Yeah.
they're more likely to actually comply.
It's counterintuitive, but sometimes making it simpler actually makes it harder to cheat the system.
Exactly. And it doesn't solely rely on that simplification, right?
Mm.
And also outlines like stricter penalties for noncompliance.
Okay.
So,
So a little carrot and
a
stick.
little bit of both. You got to have both.
You got to have both. Now, we've covered a lot of ground here, but there's one concept I keep coming back to, this idea of a pacto fiscal. The bill mentions this early on, the need for like a broad societal agreement on how to manage the nation's finances.
Right. And that is crucial, right?
Yeah.
Because tax reforms, they're rarely easy. And this is going to create winners and losers. We've talked about that. But for this modernization to really work, it needs to be seen as fair
Right.
by the majority of Dominicans.
Right. It's got to be seen as equitable.
It has to be.
Yeah.
It can't just be, some government mandate.
Right.
It's got to be something that's shared.
But achieving that sense of shared responsibility, that shared burden,
Right.
when you're dealing with such complex
Right. And impactful.
and impactful changes, that's the challenge, isn't it?
That's the real challenge.
Yeah.
That idea of pacto fiscal, I mean, it raises a lot of questions.
It does.
How do you get everyone on board with a plan that, let's be honest, might benefit some people more than others,
That's the million-dollar question, and it's
Yeah.
something our listener is really going to have to keep in mind
Absolutely.
as this legislation progresses, because even with all these details we've gone over,
Right, yeah.
we've only scratched the surface here.
Barely. There's always deeper.
Always deeper. Welcome back to the deep dive. We've been really digging into this proposed tax code overhaul in the Dominican Republic,
Yeah, the big one.
what they're planning to change, or what those changes might mean. But, I mean,
Right.
the real question is what happens next.
That's where it gets really interesting, right? Because this isn't just numbers on a page.
Right.
We're talking about, real changes for real people here.
Exactly. We've gone through a lot of specifics.
Yeah.
But it's hard to really wrap your head around how this all might play out, years down the line.
Take the VAT system, for example.
Right.
That's not just a simple flip of a switch, right?
Right.
Going from a sales tax to a VAT system,
Mm-hmm.
I mean, that's a fundamental change.
Yeah.
That could impact, businesses, how consumers behave, even government revenue, like for years to come.
It's like a chain reaction almost.
But it is.
Where one change could trigger all these unintended consequences.
Exactly. And we see that same potential with the tax incentives, right?
Right.
And exemptions. Those aren't just temporary breaks.
Yeah.
Those are very deliberate attempts to kind of steer things,
Yeah.
influence how industries grow, where those investments go, even what kind of choices consumers make.
It's like they're trying to almost architect the future
Yeah.
of the Dominican economy
Mm-hmm.
using this tax code as their tool, their instrument.
In a way, yeah, for sure. And it's a strategy a lot of governments use.
Yeah.
Whether it'll work here, who knows? Time will tell. But it raises a lot of questions.
It does, and it brings us back to that idea of a pacto fiscal, that shared agreement, on how to manage the country's finances. Can they really pull that off?
It's tough. Right. I mean, tax reform is almost never a win-win for everybody.
Right.
There will be people who adapt, who thrive under these new rules, and others who...
Who get left behind.
Exactly.
It makes you wonder how this will all play out, for everyday Dominicans.
That's what's so fascinating. We could sit here, we can analyze this legislation, speculate about what might happen, but the real test is going to be seeing it in action.
It's real life.
Yeah.
And it's what makes this, such a compelling deep dive. We've explored the what, the how of this tax modernization plan, but the why, the real impact on people,
Right.
That's a story that's still being written.
Absolutely. And it's one worth following, right?
Yeah.
Because it highlights this universal truth, I think.
Okay.
Tax policy, it's not just about the numbers.
It's about people.
It's about choices.
Yeah.
Choices that, they shape us now, but they also define our future.
Absolutely. So, to our listener out there, we'll leave you with this. As you watch this all unfold in the Dominican Republic, pay attention to the choices being made, those trade-offs, and that bigger vision they're going for, because these are questions that honestly they matter well beyond the borders of any one nation. This has been the deep dive. We'll see you next time.